What an eventful week it's been for silver. From the latest Fed meeting to Jerome Powell's remarks, there's a lot to unpack. Could we be on the brink of a significant surge in silver prices? Additionally, another bank closure demands our attention. But there's even more to delve into, so let's dive right in. Your viewership means the world to me, and I genuinely appreciate it. Let's start by examining the current silver price, which sits at $26.63. That's a notable drop from its recent high of nearly $29 per ounce. However, silver has shown resilience in the past and could certainly rebound. Now, let's explore the intriguing possibility of a forthcoming price spike indicated by Comex data. April delivery typically sees minor activity, but recent months have witnessed a steady increase in delivery volume. The latest surge in delivered contracts, peaking at 1,649, is the highest since June 2022, a period marked by the peak of the COVID scare. This surge is primarily fueled by a notable uptick in new contracts, suggesting a preference for immediate delivery over waiting for the May delivery period. The number of new contract deliveries, totaling 1,159, surpasses the next closest month by a significant 50% margin over the past 2 years, notably February 2023. Let's wrap up with the article's conclusion. Last month, gold displayed significant strength in the days following the latest report. Its price surged higher and continued until it reached a healthy corrective pullback. Silver experienced a similar surge, tracking gold's upward movement. However, Comex data suggests a notable interest in physical silver at present, hinting at a potential significant price surge in the near future. We'll have to wait and see how the data unfolds in the short term. While this doesn't provide concrete evidence, it indicates a significant interest in physical silver currently. Now, shifting focus to the recent Federal Reserve meeting, Chair Powell maintained a hawkish stance, stating he doesn't foresee stagflation. Powell didn't divulge much information about the Fed's intentions regarding rate hikes or cuts. Following the FOMC's decision to keep the Fed funds rate unchanged at 5.5%, Powell was asked about potential cuts this year, given recent high inflation readings. Powell expressed uncertainty, suggesting they would rely on data to guide their decisions. Although inflation remains elevated, Powell deemed it unlikely that the next policy rate move would be a hike, leaving rate cuts still on the table for now. Looking at the target rate probabilities for the upcoming June meeting, there's little deviation. The CME Group doesn't anticipate any shifts in rates, with an 86% probability that they'll hold steady. Moving into July, the likelihood remains relatively stable at 62.9% for unchanged rates. However, it's not until September that we see a forecast for the first rate cut, standing at a modest 31.4%. This translates to approximately a 68.6% chance of rates decreasing. This consistency in predictions suggests a static scenario regarding the Fed's actions. Nonetheless, the prospect of a rate cut in September is optimistic for precious metals. A decrease in rates typically weakens the dollar, bolstering the appeal of gold and silver. Now, let's turn our attention to the FDIC's list of failed banks. The latest addition is Republic First Bank, which ceased operations on April 26, 2024. This marks the first bank closure this year, following the shuttering of Silicon Valley Bank on March 10, 2023, roughly a year ago. Republic First Bank's closure represents the sixth bank to shut its doors, signaling a concerning trend. The article delves into the reasons behind this unsettling pattern, highlighting the precarious position of hundreds of U.S. banks. According to analysis by consulting firm Claros Group, out of approximately 4,000 U.S. banks examined, a staggering 282 are facing significant risks. These banks confront a dual threat emanating from commercial real estate loans and potential losses stemming from higher interest rates. The majority of these vulnerable banks are smaller lenders with assets totaling less than $10 billion. The looming specter of potential bank failures raises apprehensions about the stability of the banking system. In such uncertain times, there's a possibility that individuals may once again turn to precious metals as a hedge against financial instability. The Silver Institute unveiled its latest World Silver Survey a few weeks back, and diving into its depths has been quite the endeavor. It's a hefty 92-page document. Nevertheless, I've been meticulously combing through it, eager to share some key insights. Let's zoom in on the longer-term trajectory for silver. One striking aspect is the persistent uptrend in demand, particularly fueled by burgeoning industries like electric vehicles, hybrids, and PV installations, that's photovoltaics or solar panels. This upward trajectory is projected to extend into 2025 and 2026, signaling a promising surge in industrial silver demand, which could inevitably propel prices even higher. Now, shifting our gaze to physical investment, a noteworthy trend emerges. Despite reaching an all-time high in 2022, physical investment took a sharp nosedive in 2023, plummeting by a staggering 28% year-over-year, hitting a three-year low. Interestingly, this decline was exacerbated in Germany, where sales took a nosedive following VAT changes at the start of 2023. The imposition of taxes on silver purchases dampened retail investment sentiment significantly in the region. Surprisingly, despite global uncertainties, the data suggests that the silver market is currently more driven by industrial demand rather than retail investor activity. While this might seem unexpected given the prevailing global landscape, the numbers paint a clear picture of the evolving dynamics within the silver market. The final topic on my agenda today delves into the fascinating realm of coins and metals fabrication. It's a riveting exploration into the production of silver ounces by each country specifically for retail investors. A captivating rivalry unfolds between the United States and Canada, where the annual production of silver eagles and silver maples becomes a near-balanced contest. Beginning in 2020, the United States boasted 32.7 million ounces compared to Canada's slightly lower 28.8 million. However, in the subsequent year, during the surge of silver eagle prices, the scales tilted with Canada leading at 36.4 million ounces against the United States' 32.2 million. This dynamic continued into 2022, the zenith of silver eagle prices, with Canada dominating at 35.8 million ounces while the United States dwindled to 21.1 million, a marked decline. By 2023, a shift occurred, witnessing the United States regaining ground at 29.1 million ounces, while Canada produced only 23.4 million. This resurgence positioned the U.S. back on top. As we navigate through 2024, one can anticipate a semblance of last year's trends, influenced by prevailing premiums and market dynamics. The week has certainly been packed with silver-related updates, leaving us pondering its future trajectory. Will silver ascend once more or continue its descent? Personally, I hold an optimistic view, believing silver will outshine gold, envisioning a bright future for this lustrous metal. Your insights on this matter are highly valued, so please share your thoughts in the comments section below. Consider joining our community by subscribing to our channel and activating notifications using the bell icon. Thank you for being an integral part of our community.